Hey there, Blockhead traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, September 20th, 2023, and this is Blockhead Traders Weekly. In this week's episode, it's just myself, Sprocket888, and I am going to cover a couple of points that we recorded the last time. However, the footage was lost to the computer gremlins. I am going to touch on an update to my US Treasury strategy that I have deployed in my portfolio, and I've been at it now for about 5 to 6 weeks and let you know what my thoughts on that are. I am also going to touch on the Decentralized Exchange crypto trading bot running on the Hummingbot platform, let you know a couple of my first impressions of that and some of the next steps that I'm taking and where that experiment is kind of heading. That one is very young. It's only about a week or two into it, so not a lot of finalization conclusions there, but we'll update you briefly on where I stand with that. But before we hop to that content, I want to give a shout out to our Discord, link in the description below. Also a link down below, thetagang.com/sprocket888, where I post each and every one of my trades, the good, the bad, and the ugly. But let's hop to this week's content first. And first up is the US Treasury's auction results. Now, I'll put a link in the description above where you can catch the previous episode where we first introduced this concept. However, I'm going to summarize some of my strategy here for you guys. And that strategy is really about putting the cash to work in my portfolio while it's sitting there as cash. Now, my broker is TD Ameritrade, and they give you a savings rate for cash in your brokerage account. In my particular case, I want to say it is about 0.5% is the annual rate and what you will earn on cash in there, which when you compare that to bank rates, savings rates, all that stuff, it is ridiculously low. However, that's quite a bit higher than it was about a year ago. I don't remember the exact number, but I want to say it was like 0.1% or something like that. And it makes a lot of sense, right? Because, TD Ameritrade is kind of incentivized to be able to do things with your cash and not reward you very highly for holding a lot of cash in there. And with my particular trading strategy, I like to keep a lot of buying power on hand. One, because I don't know when I want to deploy it, and I want to kind of always have it on the ready to go after something, and I want it very quickly available in my brokerage account. Two, I do a lot of premium selling or option premium selling, and because if you do that in a way that you don't define your risk and you basically sell naked options or undefined risk trades, if the trade moves against you, it can really start to pull in a lot of buying power. And so you might open a particular trade that requires, let's say, a buying power of $500. And if the trade moves against you, still profitable, but moving in the wrong direction, that buying power can really expand, somewhere around $1,000 or $1,500 of buying power in order to hold that option. And in my trading strategy, I am rewarded or paid for holding that option. As time decays, that option reduces value, and that actually makes me money because I sold that option early on, and so I want that value to go down so that I can buy it back for less money than I sold it for. That's how I profit on that short premium strategy. And so I like to keep around 30 to 50% of my portfolio in this free buying power to take big market drops, big market rises, whatever is going to move against my positions. I want to be able to not have a margin call when I get hit with that buying power expansion. And that means you have to keep cash around. And in 2022, I had taken a lot of that cash and tried to put it in equities that I consider more blue chip equities, and thinking that would keep my buying power kind of up or stable while still getting some return, ideally on price appreciation of those equities. Well, in 2022, the stock market fell something like 30%, or my positions dropped 30% over the course of the year, and that really kind of put me in a buying power squeeze. So what I have recently done is I have focused on 4-week treasuries, And that basically means they're good for 4 weeks and the government pays you back. So every week there is a 4-week treasury auction. And what I do is I buy a particular percentage of money of my portfolio in a 2-week treasury every single week. So the auctions are announced on Tuesday. The auctions take place on a Thursday. So I'm usually entering my order on Tuesday or Wednesday, and it's executing on Thursday. And then that treasury is locked in for 4 weeks, and then the government pays me back. And when I buy that treasury, I purchase it at a discount to par value. Par value is basically just what the coupon is good for. In treasuries, that's $100 for the short bills that I'm buying. And so every bill that I buy is, I will get paid back $100. And in the auction, I actually pay somewhere around 99 and some change for each one. And that difference is effectively the return of me buying that short-dated treasury. Now, the benefit of all of this is in TD Ameritrade, that really takes no buying power whatsoever. And so for $1,000 in US Treasuries, you consume only $10 in buying power. So it's like holding cash effectively while not holding cash. So I am able to get the yield from those treasuries equal to whatever the auction sold for while I have the cash or while I have that money sitting in my brokerage account. So I think of it like 10xing my cash return. So if I did nothing, TD is about 0.5%. The most recent auctions were yielding over almost 5.25% yield. And so I'm taking that from a 0.5% return to a 5%, 5+% return on that cash. To me, that is just more efficient. And I'm not losing any of the benefits of having cash in the portfolio because those treasuries are so liquid. They're easy to get rid of. Because they're so stable and it's the US government that's backing them, there's really not a chance that, you're going to lose much value out of them because as soon as they expire, the United States government is going to give you back that par value. And so I'm never more than basically 4 weeks away from getting that cash back naturally. Of course, you can sell them or return them back on the open market for a fee. Now, what this has allowed me to do is basically kind of layer into that treasury. So every single week, I'm basically putting in 1/4 of what I want to have in my cash balance. And so for me, that's roughly about a $2,000 purchase every single week of 4-week dated treasuries. Now, one thing I learned is it says it is a 4-week treasury, but your ladder is actually 5 weeks long. And that's because the auctions complete on a Thursday, but the maturity and the award and the settlement of that auction happens the following Wednesday. And so, or the following Tuesday. And so what that means is even though I purchased the treasury on this Thursday, I don't actually get it or it doesn't actually settle until next Tuesday, which I'm already putting my order in for the next week. And so your maturity, while they are 4 weeks, it's 4 weeks from the week after you actually execute in the auction. So you kind of have a week of this kind of hold period. What that basically means for me is I end up having 5 weeks of ladders there. And so for me, it's 2,000, 2,000, 2,000, 2,000. So let's take a look. I've actually had 2 of these come off of my ladder. And so if we switch over to this return, you can see right here are the first 2 treasuries that I had. The very first batch was this first one where I opened them on August 10th. This was my first experiment. So I went in there at $1,000. So basically I got those for $99.589. And I purchased 10 of them for a total of that $1,000. Remember, they're sold in $100 par value. Depending on your broker, the amount that you can purchase will vary. In TD Ameritrade, it is $1,000 increments. So I cannot purchase anything less than $1,000 through TD Ameritrade when it comes to US Treasuries. You can purchase in as small as $100 increments if you buy directly from UStreasuries.gov. In my case, I don't do that. I want it with my portfolio. That's where my cash is. So I am basically bound to $1,000 chunks. Now, I wanted to do $2,000 every week. And so you can see the second week I actually did $3,000 because I wanted to split that difference because I wanted my ladder to work out to be $2,000, $2,000, $2,000. So you can see there, while it is 3 times larger, the total additional cost is roughly 3 times. I paid about the same price of $99 and 50 some odd cents for each of those in that second round of treasuries. And you can see over here the adjusted gains. So for the first one, I actually made $4.11. And for the second batch, it was $12.32. Makes sense because it was 3 times the size on the second round. And so now that I'm in my 2-week or my $2,000 ladder, it is effectively an extra $8 and change every single week. And every week, one of those is coming off and I'm putting a new one on. And so right now, the rates of these, if we hop over here, you can see this was one of the ones that I most recently put in. $99.589333 cents was what it was allocated at. And so that yield was coming in a little over 5.25% was the median rate that was awarded. And so just like that, I'm basically pulling in a weekly return. Now, it might seem like peanuts, but that constant drip, drip, drip of just $8 a week, and then I compound that over because as soon as that $8 comes off, it's going right back in another round of investment for another US Treasury, and round and round and round we go. And the flywheel is operating. That is keeping my buying power in a good place for my portfolio, while constantly generating a small amount of income. And really the alternative to that is, okay, don't put it in something and hold it in cash, where I would receive 1/10 of that on that interval basis. So the next topic that I want to talk about is the decentralized Hummingbot experiment that we engaged in. And I'll put a link in the description above. So click up there if you want to see the original episode on the Hummingbot endeavor. The Hummingbot is effectively a decentralized exchange crypto trading bot. It can work with a centralized exchange. I want to make it sound like it's just the decentralized exchange. However, for me, I am much more curious about the decentralized finance world. And so I wanted to have that trading bot operate on a DeFi protocol and not a centralized exchange. And I went down with the market making bot strategy, where all I'm trying to do is put orders out there to profit on the bid ask spread difference. And when you deal with when you deal with decentralized exchanges, especially ones that don't have a lot of volume, that bid ask spread can be pretty wide. And so kind of coming in there as a market maker to split the difference and tighten that up can be somewhat profitable. And, the percentage of profitability wasn't too important to me. I really wanted to understand the mechanics, put this thing to kind of work in the background so it's constantly running whether or not I'm here or not. It's programmed to just execute those trades. So for me, as long as I can kind of come out somewhat profitable, that is good enough for me. As again, it's this background task that's just kind of taking a pocket of money and constantly recycling it. So it doesn't take a considerably high amount to get started, because you're basically kind of keep using that same amount of funds. And so as soon as you issue it out in a sell order, your next order can be a buy order, and all you're doing is kind of flipping that thing back and forth, back and forth, back and forth. So it doesn't take a tremendously high amount of capital to get going, but it does take a little bit of setup time and tweaking and configuration. So what are my impressions so far? Well, my impressions so far were a little bit less than I had kind of hoped. So when I saw Viper go through it, when I started reading about it, I thought I would have this up and running and I would spend most of my time kind of tweaking the algorithm, tweaking the parameters, tweaking the settings, running numbers, running theories, right? And trying to dial in on a particular profitability or fine tune the strategy to a certain degree. However, that is not what I learned. Two things happened. First, because I went with a decentralized exchange and I went with a not so popular decentralized exchange where the bid ask spreads are much, much, much wider, thinking that was going to bring better profitability chances. Turns out the extremely wide spreads there equate to not a lot of volume, which I knew, right? I mean, that's the nature and the mechanics of how that works. But I guess I didn't fully comprehend the practicality of what that meant. And that means that my order sits out there for minutes, hours, tens of hours, like a long time before that order gets a fill. And I guess I had spent a lot of time, doing scalping and things like that in the stock market, where I'm used to issuing a trade, bang, it's executed in seconds and it's filled, because that's the difference between very liquid and very illiquid markets. And so that was a little bit of a shock to me, where I thought I would quickly get all of these data points, because deploying this bid-ask spread strategy, like in a very liquid market, like in equities or probably even a centralized exchange, although I didn't try that, you're going to be, popping back and forth between the bid and the ask, fill, place, fill, place, fill, place, fill, place. And I think you get a lot of data to parse, a lot of faster tweaking and turning of the knobs. Whereas in the decentralized exchange, that is lower volume, it's like bing, fill, order created. Wait. Maybe you get filled. Maybe the order expires and it's reissued. And so it's not a lot of fast feedback, and that I was not actually expecting. Probably should have been, but I was not. Now, the second surprising thing is I thought there would be a whole lot more stability and reliability in the algorithm trading, and I was shocked to find that it wasn't. Now, it is an open source project, Hummingbot. The project is great. The documentation is great. Kind of support from the community has been good, and so it's really met a lot of those expectations. However, I don't think I fully appreciated how kind of clunky some of the stuff operated. Like, I would get lots of errors. Orders would not get canceled. Orders would not get filled. Not filled, but they wouldn't get placed. They wouldn't be reflected. So the bot would say, yeah, I placed the order. Here's the confirmation. I would go on the chain, try to look up the confirmation. I couldn't find it. It didn't exist. And so there was a lot of, I'll call them inconsistencies there while it was running. And to be fair to the Hummingbot project and things like that, I did a lot of troubleshooting when this kind of inconsistency and instability was there, looking at log files, trying to trace this, trying to figure out what's going on. Is this a problem in my container? Is this a problem with some sort of API limit? Or is this a problem with the application? What's going on? And where I kind of got it boiled down to, the majority of the strangeness that I was seeing was really with what's called as the RPC node, or the RPC server. And so the RPC is effectively a remote procedure call. Think of this like, remember, a decentralized exchange, there is no central body. There is no central server. So if you operate something on the internet and you want to use web-based APIs, there's usually a central server that you're calling to that's run by a company that's hosting those APIs. Like Google has APIs that you can leverage against it. And they facilitate the infrastructure that runs all those servers. So if they got 50,000 API calls a minute, they scale up their infrastructure to handle those 50,000 API calls a minute. In a decentralized exchange, it's right there in the name, decentralized. There is no entity that is basically running this as the central exchange, right? It's all decentralized. It's actually happening on the blockchain that particular decentralized exchange is running on. Now, in my case, that was the Avalanche network, and I was on a subnet of that called Dexalot in my experiment. So that means that anytime a transaction wants to happen, that has to go into that particular chain as a coded message that has to be validated and put into the blockchain so that everybody else knows that it's there and then can operate on it. And that's where RPC comes in. So in order to get your commands into the blockchain, there has to be a node that is able to interact with the blockchain and you talk to it. And this is what an RPC node is. The RPC node is the node that my computer will reach out to and say, hey, I want to place a trade on this thing at this price, and all the detail. That RPC server will then take that, encode that message, put it on the block, and the validators in the network will validate that message and pick it up. And in the case of a decentralized exchange, you basically rely on what these are. I have it pulled up here, is basically public API servers, or basically remote public RPC things. So in the case of Dexalot, they do have a public node out there. And in the documentation, it tells you what the address is that you should use. If we scroll down here, you can say, here are some of the subnets that are public. Right here is the Dexalot server. And here is the public RPC node. So my Hummingbot was configured to talk to this public RPC node. Well, the thing is that node has API limits because that is the general public consumption community thing. And so they don't want people hammering it in like a high frequency trading bot or algorithm because they want to make sure that that's available for general public consumption. Think of it like a speed limit on a road. And so this particular node has an API rate limit of like 10 API calls in a 6-second period. So almost just one call a second. And when you're trying to run a high frequency trading bot, that is absolutely nowhere near enough calls. And so I was continually running into that API limiting. And I think that was the source of my instability because of the way that whether or not it was the actual API limit that I was hitting or general instability in that node processing the requests. So, one of them might just be for information like, hey, can you find this open order? And then the node says, hold on a minute. It finds it and returns that over a web API call. Well, if it's really busy or it's, clunky and you don't hit your limit, it still might not return the data or it might return it in with not the correct stuff. And so a lot of those inconsistencies, I think, were coming from that RPC node. And when I investigated a little bit there is actually anybody can run an RPC node. You actually don't need to be a validator. I thought you had to be a validator of the blockchain in order to have an RPC node that you can use. But that is not true. Actually, anybody can run a node, track the subnet. So as long as your node is tracking the subnet, it can be an RPC node and a server can interact with it. It can put transactions onto the blockchain on your behalf. Other people on the blockchain will validate it. And so that's really where my experiment currently is. I am standing up my own node, my own Avalanche node, and I'm going to have it track the Dexalot subnet. And then I'm going to link my Hummingbot to that RPC node, which will be my private RPC node. Now, it's private from the standpoint that I'm not going to open it up to other people to use, but it's still participating on that public blockchain. And so this should remove the dependency on the API rate limiting, and it should allow me to manage the resources of that RPC node such that I can scale up or down the resources running that to meet the demand of the high frequency trading bot that I'm trying to run as Hummingbot. This is pretty much where we are with those two experiments that I embarked in. The US Treasuries is an overwhelmingly positive success for me. I very, very much like it. It has been working wonders from a standpoint of I really feel like my capital is now doing as much as it can be while still protecting my buying power expansion. That is a strategy I definitely encourage you guys to look into because there really is almost no cost penalty for basically holding those treasuries. And especially at a 4-week treasury at the current rates of the 4-week T-bills, I mean, it's very high. And yes, there are savings accounts and stuff out there that might be yielding more than those T-bill rates, maybe, but not that I've really seen. It's more of you got to have a certain dollar amount to lock it up in like a money market or something like that, not in these really short-term windows. And so, I highly encourage you to kind of investigate if that makes sense in your portfolio. I would especially encourage it if you like to keep cash around in your portfolio, because whether or not you use TD Ameritrade or some other brokerage, I would wager that the rate that you receive on the cash sitting in your brokerage account is going to be less than the rate of return that you will get from owning those US Treasuries at the short term, at least at this particular point in time. Now, if those rates dramatically fall sometime in the future, then maybe that might get reevaluated. But typically, as those rates fall, so too does the rates that the brokerage pays you on your cash. And so, just like I said, a year ago, that rate was extremely low, like 0.1% maybe, and now it's 0.5%. I would expect that's basically because rates have risen. If rates fall, a similar thing will happen where that proportionality of that return from the T-bill versus the rate that my brokerage is giving me, I would expect that to remain relatively proportional. And then there is the Hummingbot trading algorithm bot that I'm experimenting with. There's still more there. We're definitely going to visit that more because, like I said, it's only been a couple weeks and I don't really have a ton of data under my belt, particularly because I haven't been able to get that RPC node up and running yet. And really the length of time there is to synchronize with the Avalanche blockchain. So the Avalanche blockchain is almost a terabyte in size. And not only does your computer need to download this blockchain, but as it downloads it, it runs the calculations to validate the blockchain from the beginning to present. And so it takes multiple days, if not weeks, to fully synchronize a local copy of the blockchain on your Avalanche node. Once it's synchronized, it keeps itself up to date. It's always running and you're good to go. But that initial, it's called bootstrapping, can take quite a while to achieve. So that's what's going on with myself. Next week, I'm not sure if Viper will be back or not, but we will come up with some more interesting concepts to cover and interesting topics to talk about. If there's anything that strikes your fancy that you would love to hear us cover, hop in the Discord, let us leave us a message, leave a comment below about what type of content you want to hear about, and we will write it. Otherwise, good luck out there in the markets. Action is kind of starting to pick up. Fall is kind of coming. Fall is here. The summer traders that kind of went away on vacation are kind of returning. Volume is starting to pick up. Lots more talk on rates and what the Fed is doing and what the impacts of geopolitical stuff are. So lots of opportunity for volatility, lots of opportunity out there for price action, both to the upside and to the downside. And so depending on whether you're a long trader or a short trader, I really hope you're able to find things that interest you and plays that, help build you wealth and you can get to continue to grow. So good luck out there. And remember, think outside the block.